This is our second day of our annual Entrepreneurship Week, so thank you for joining us. We're really excited about the talk today. Tomorrow we also have an open house at the CIE from about 12:15 to 1:15. So come by our headquarters and meet us, and if you have any questions, we'd love to talk to you. Then on Thursday, we have some of the guys from Crunch Fund coming to talk, and Friday we'll have our venture fair with some student-run ventures just right outside the hub. So today, I am introducing my dad, Gamiel Gran, and his co-founder, Prithvi Kandanda, to talk about their experience with virtual reality, and some more of their career paths and how they've gotten to where they are today. So I'll give just a brief background. Gamiel Gran is currently the Chief Strategy Officer at SOSTA, and prior to that was a partner at Sierra Ventures, and is now one of the co-founders of Ease VR. So if you haven't tried it yet, the VR head-mounted displays are in the back, and you can give it a go once we're done here. And then PK is one of the co-founders and current COO at Ease VR. Prior to that, he was the VP of Enterprise Mobile Solutions at Windware Technologies, and also the Director of Enterprise Mobile Solutions at Appcelerator. So I really hope you guys enjoy today, and we'll have Gamiel come up and do his talk. Thanks.
Well, thank you. Thank you for showing up. It was great. Emily called and said there may be about 15 people or so who will show up for this, but then she called and said, no, there's more like 80 or something, which is great. So thank you for the introduction. Again, my name is Gamiel Gran, and it's a real pleasure to be here and to talk about something that's exciting to us, both PK and I, which is virtual reality, and I hope all of you will have a chance to take a run through some of the experiences we brought with this consumer version, applications and experience from virtual reality. So Emily asked me to spend a little bit of time talking about venture capital, and we're going to do that for a few minutes, and then Prithvi, we call him PK, is going to get up here and talk about the virtual reality market and specifically what's really so exciting about the space. So we basically have two topics, a little bit about VC and a little bit about VR. At the end, we'll have a chance while people are doing demos to spend time answering questions. A lot of people ask me, how did you get into venture capital? What's your background? How did you make that transition? So I'm happy to spend time with anybody after, just one-on-one or whatever, going through that. This presentation I've done a few times for the ITAB, and it's a presentation that I enjoy giving really as a perspective of what venture is about. But interestingly, Emily speaks about our time at home where, when I was in venture, every Monday morning we'd have our partner meeting, and there'd be pitches of different wild companies, like the team from Siri came in, the team from Lyft came in, now they were Zimrite at the time, and and I'd come home and say, what do you think of this weird idea? I remember Snapchat was one of the ones we listened to, and we thought that was a stupid idea. Bummer. And we'd sit around the dinner table Monday evening and talk about what venture capital was. So this is essentially, and it's apropos that you're sitting here eating, this is kind of the dinner conversation that we would have at the Gran House. So what I first want to do is really just give you a sense, and this is probably a repeat of what you've already know about, but basically there's three main constituents that make up venture capital. It all starts with the money, and the money is on the left. It's the limited partners or the institutions that are looking for improved capital return for sizable amount of capital that they are responsible for. So there's a chief investment officer here at CMC. In fact, he presents to the trustees, and you guys should find your way into one of those presentations once when he's presenting, because he'll talk about the effort of improving the capital return of the endowment that Claremont McKenna is responsible for. And the chief investment officer is indeed a career path that you should think about. And you have somebody here on campus who does just that and works with venture firms to understand how to get the best possible return for the endowment here. And there's CIOs of this kind across many different institutions, from corporations to large endowment funds, et cetera. So they're chasing yield. At the far right, of course, are founders looking for ways to accelerate their ideas with capital. They need capital to support their idea and to support it in a way that allows them to compete against others who might have capital access as well. So they bring their brilliant idea, and typically as a venture firm, we would have thought of investing in companies based upon three key attributes. It's the team, it's the technology, and it's the total addressable market. So the three T's we talk about. And the team would often be, at a very early stage, the most critical. Have you done this before? Are you an expert? Are you a profound expert with repeatable sort of knowledge that you've been able to apply in a previous sort of entrepreneurial success? You have a track record of some sort. And boy, the bar gets high there. Thinking about it as an undergrad, how much of that real capability do you have? So the team thing is generally the toughest ones that a venture firm would look for. The next is the technology. Is there a breakthrough in the technology that is truly interesting, that supports something that others have not yet achieved? But probably the most important is the TAM, the total addressable market that makes up what that idea is about. And the venture firms really are just picking which ideas. So it's a little more complicated than that, but basically they're a middleman function, taking a carried interest on the outcome and a management fee from the limited partners. So lots of details about that, but now that you understand the ecosystem, a little bit of history of venture. It's an American homegrown thesis. It started back through the U.S. creating, there was a concern about not enough businesses were being created, and this is in the late 50s. After people returning from the war and a decline in the market, there was an early recession sort of climate going on, and the federal government decided that they should instigate or catalyze small businesses through a whole new administrative program known as the SBA. That launched access to capital that was much different than previously available to these fledgling startups with no profits and really no idea of when they might reach profitability. Later in the early 70s, there was a federal law passed that made it possible for pension funds and endowments to take a portion of their capital and give it to venture capital firms. And it was this that really opened up the floodgates. Access to capital fundamentally changed, making it possible for venture firms to become true businesses, to have sustainable models where they would take this funding from endowments and be able to manufacture opportunities in a formal sort of way with endorsement essentially from the federal government. This has not essentially been replicated around the world in the same scale as in the US, which is an interesting phenomenon. So we continue to lead the venture world from a capital standpoint, and this picture of the Sandhill exit, which interestingly, we live right across the street, right? So anyway, so that's that. There are a number of great stories, of course, around the results of venture capital. There's brand names that we're all familiar with. This is a slide that's put together by NVCA, which is the Venture Capital Association, essentially, of America. And they're constantly presenting to Congress and Senate and the White House the benefit of what venture really has from a job creation standpoint. And in fact, it further goes on to say, look at these companies and the kind of employment they had prior to IPO and post-IPO, and therefore how important it is to our overall market. But the real bottom line is venture is all about, as I said, institutional investors chasing yield. And there is ebbs and flows, and I'm sure you've seen charts like this. This is produced by Cambridge. Cambridge is essentially the master of all data for performance of firms and how they're performing over one another. And in fact, it's not a bad place for a CMC grad to consider for employment. It's an analytical organization of sorts, highly regarded amongst the venture firms, considered the benchmark for all data coming out of venture firms, and produces these reports on a regular basis. And what you can see here, and I've circled things with a couple key points, In 2008, there was a pretty aggressive downturn in the market, as you're all familiar with, and this had a fundamental effect, of course, in the public markets, but it also had an interestingly dire effect on the private market, the venture market as well. So private equity was almost equally hurt by the downturn in the public market, and surprisingly so. So I mentioned the CIO, the Chief Investment Officer. There's a number of chief investment officers that are protecting these assets and often have a thesis around protecting in bad times or in down markets, and virtually they were all hit by the downturn in 2008. And so we see in the year circled here below the poor performance in the single year, not necessarily much better than what the S&P market was performing, the public market was performing. But this then returned just this last year back to yields that were more consistent with what the long view of venture has produced, which is roughly 3x the public market. And boy, that's a tough one to continue to produce year after year, generation after generation. And so the idea that there's downturns actually is not illogical, but it speaks to the kind of yield that the investors are looking for from venture. It's high risk, but high yield. There's been a long transition of the venture community back from when it started in the early 60s to new different models, and it continues to evolve itself. Firms are looking for ways to differentiate themselves aggressively to potential investors. 2008 caused many venture firms to really struggle with raising a new fund in perhaps the worst sort of way. The terms for carried interest, the terms for management fees turned on their heads. They had to differentiate themselves from a deal flow, unique access to market, unique value add to entrepreneurs. They had to become salespeople of their own differentiation, their own market, their own capability in a much different way than they ever have. Incubators started. Angel investors started producing things. New platforms like Kickstarter and crowdfunding started, Indiegogo, et cetera, basically winnowing away some of the deal flow that traditional sandhill firms have always been capturing without much marketing. So that's created a competitive market, and what you're seeing here is basically a long view of the ongoing innovation, if you will, around how venture firms have continued to evolve. The trend right now is there's a bulge bracket at the top, a few key firms who are indeed capturing nearly 100% of all deal flow. The Andreessen, Sequoias, NEAs, et cetera, continue to get the lion's share of deal flow. Meanwhile, there's a number of micro funds that are raising in the sub 100 million sort of range of a firm size or a fund size that are able to, from an institutional return, manage smaller investments. And so they're creating an opportunity in the earlier market, the seed market of investment. And so it's become a bit of a two-pronged or a two-stage sort of investment climate. The larger firms like Andreessen, Horowitz, that very aggressively went into the market with a broader thesis around investment have since pulled back in their ability to actually make small investments. The size of a fund of $1 billion, if you think about it, Mark Andreessen and Ben Horowitz and team have about 12 partners total in the firm. If you have $1 billion, how do you actively find enough opportunities to put that money to work? Meanwhile, your LPs, your limited partners, are demanding rapid return on their money. So don't be sitting on it. We need you to put it to work. Find a brilliant opportunity. So yesterday when we hear that Andreessen is putting pipe money into Twitter, they're looking for alternative ways to create returns in markets where they don't have enough entrepreneurial ideas. It's always chasing ideas and looking for that idea sooner and faster. For the largest firms, it's about finding huge ideas that can return the size of the fund. So if you're looking for $1 billion return, boy, that's a pretty amazing idea. These micro funds are looking for are able to invest in smaller ideas. If you're only sitting on a $100 million fund, you can appreciate or you can create a return at a much smaller scale. Does that make sense? So long view, we're on a tail up. The outlier years clearly stand out and created a whole number of scenarios. So 2000, the dot-com era was a very exciting era and a disappointing era for a lot of people, and created a dearth of market opportunities and a dearth of ideas as well. The capital went away from venture for a period of time. But the market continues and venture is back at a roar. And you can see a number of charts, and I'm sure you see these in your classes often, but in general, venture is as strong as ever, investing across many different markets, and I think the diversification and innovation across different funds have supported that. A lot of people talk about the unicorns, and the idea that unicorns is really about that capital equation that I just showed you. So too much capital in the hands of too few firms, making larger bets and actually forcing larger bets has created valuation opportunities that are much different than we've seen before. So not enough ideas and too much money in small hands or fewer hands creates that sort of opportunity. It is true, though, in support of that, and I do think this is probably the primary thing, we are at a very interesting sort of renaissance time around very interesting ideas. And of course, we're standing here talking about virtual reality as well. There's a number of other amazing ideas that are happening that's also supportive of the billion-dollar club. The idea that it's taking shorter period of time for these companies to reach this sort of valuation is an interesting phenomenon, and I think this is where we're getting the unicorn reset right now. Valuations of unicorn-ish companies are higher than $1 billion valued companies being reset by either the secondary market or the public market even after they go public. Square, repriced much below their last round as they hit public market. And even now, post-public, having a hard time maintaining even those valuations. So interesting sort of clarity on the whole thing. How the companies get priced and all of that is a bit of a voodoo science. And if you spend time with a venture capital firm and ask them, what's the math? How did you actually come up with that number? You likely won't get more than a lot of qualitative, not quantitative support to the data. Day in the life of a venture firm is basically looking at thousands and thousands of business plans and ideas. And I put this together a while back, and I just did kind of a 12-month view of what it was like at a venture firm. And over the course of the year, I looked at 3,000 different business plans, which resulted in 10 companies that we moved to funding. Meaning of the 3,000, only 10 of them reached a high enough caliber of support from the rest of the partners on those 3 T's that I talked about to actually warrant a term sheet. And not all of them did we actually win. In a competitive market, you might not win all those term sheets, meaning you might not get successful funding to the entrepreneur. But the idea of constantly looking at business plans across many different ideas is really the core of a big data science, if you will, for a venture firm. So what's different about a venture firm than a typical, let's say, public investor is the access to this sort of information at a broad scale. So people would come in and ask me, so Gamiel, you're honing in on big data, and that was a topic that I was interested in. It's like, well, it's not like I'm a technically rich individual around big data. It's not like I've written the PhD book on that, but I've seen a lot of companies. I've seen so many companies around this topic area, different entrepreneurs from all around the world with different points of innovation, and I can stand back and look at this data in a way that perhaps the general public can't. So through access to more information, through big data, if you will, I was able to make a much more clear view of where the market was going to present that concept. So I think this is a really interesting point, particularly as you think about graduating and entering into the market. And if there's anything to inspire yourself to do is to start your own company. And always think of that in mind. This is a world, this is a country, this is an environment that supports that in a very meaningfully supportive way. You're coming from an institution that I think gives you a lot of capability. Thinking about being an entrepreneur is a bit of a risky one. I'm suggesting you challenge yourself, you challenge your friends, sit amongst tables like this and think up ideas constantly because you live in a world where there is an enormous opportunity. Some people have written that we are about to embark on a wholly new advancement of culture through the way that digital being applied to what has traditionally been an offline or paper-based world. And if you think about the numbers of things that we do in this world and how they will migrate to a much more advanced process, this will fundamentally change technology needs and create entrepreneurial opportunities that are fundamentally different. This came out of Davos this last week, are we on this fourth industrial revolution? And what is it? And what will productivity look like in the future? And can we achieve this higher level of productivity and world value and personal value for all of us? And Davos suggesting, and this is written by the president of Davos, the CEO, saying that yes, we're at the precipice of that. There's a moment of time that the technology, the market, the needs of the market, and the populace to support it will create the next generation that will last many generations to come. So some numbers that I think are interesting, that support this, and these are fundamental changes. And this 50-50 rule is something that somebody shared with me a while back, and the idea that we've got 50 billion devices by the year 2020, and these are IoT devices, Internet of Things, sensors, et cetera, Fitbits that I'm sure some of you are wearing, virtual reality headsets, and of course the many cell phones or smartphones we all have. These fundamentally change the ability to capture and process information in ways that are altogether different. You add to it the amount of data that we're collecting against this information, and you really do begin to see things like changing world hunger or solving cancer or advancing the science of virtually every topic that stands in front of us today that might be a problem. We have enough data to do that. So just as I was able to say, I was able to look at 3,000 big data companies and pick the right ones, you too are sitting on an opportunity to unleash this data in a way that probably is different than ever before, right? So lots of people, lots of devices, lots of ideas constantly coming at us. And I mean, it truly is exciting. Pinch yourself. You're living in an era of opportunity that's huge. The area that I want to focus on is virtual reality. So I hope all of you will put on the headset. I've put on your tables here a survey document. We're all about collecting data. Prithvi is going to come up here and talk about ease here in a second in the virtual reality world. But what we've been doing together with a few analysts who are focused on the advancement of virtual reality is collecting people's experiences in early experiences. So we're at the beginning here. This is the rawest of technology. So we're over there with cardboard and we're sliding phones in. I expect this is going to get a lot more elegant soon, a lot more immersive, a lot more seamless. But we're at the beginning. So again, pinch yourself. You're at the front end of what we think is really advancing technology. We'd like to collect your data around what you think of this technology. So please take a minute and complete that if you would. So with that, I'll bring up Prithvi.
Hi, everybody. Thank you, Gamiel. Thank you, Emily, for the nice introduction. So my name is Prithvi Kandanda, or PK, like everybody calls me, and I'm an entrepreneur. So Gamiel referred to entrepreneurs and investors. I've been an entrepreneur for, I would say, around 15 years now. This is my third company. The first one crashed and burned. Second one did reasonably well. This is the third outfit. So I'm going to talk to you about virtual reality and give you an introduction into what the various head-mounted displays are. We'll also look at what the opportunity is. We'll also then look at what the different use cases are which are being developed. And even though it's an early stage market, there are lots of companies trying to do different things in virtual reality. Then we'll look at what ease does in this space, and then we'll look at how we do it. I'll show you some examples of our product, and then I will introduce the survey. Oops, I didn't do it right. No. Give me a second, sorry. Oh, there you go. That was the last slide. All right. So virtual reality is actually the most profound user experience platform ever created. This is an extremely bold statement, and some of you might be aware, virtual reality has been around for a very long time. You know, it's almost been there for 20 plus years. But today we are at this point where the technology, the computing power, and the prices are at a point where it can actually become a consumer device. So some of you might have heard year and a half back, Facebook acquired a small company called Oculus for $2 billion. And that is what kind of kicked off this whole momentum, because Oculus was a really small company. They were probably around 10 people. They had raised some money on Kickstarter. But they had this fascinating technology which captivated people's mind. And what they were able to achieve with this small set of technologies was something called presence, where your mind actually thinks you are there in the virtual space. That was a turning moment, because till then, people were not able to achieve what is called as presence. So to achieve presence, your mind needs to have all senses in order, right? So you should be able to coordinate your sense of sight, sense of hearing, sense of touch, smell, all of that. That's when your mind thinks you're there. So some of these new devices today, especially if you wear the consumer version of the Oculus device, will actually, your mind will think that you are there in that world. So that was a significant technology achievement, because you might ask, why is VR so exciting today? It's because of these reasons that VR becomes exciting. So fundamentally, the way you need to think about it is that you have today two types of VR, virtual reality. The first one is what is called as a mobile virtual reality, where you take a mobile device and slip it into an HMD. Now, HMD means a head-mounted display. And that is mobile, so you can walk around with it. You can, it is not tethered to any wires. The second set, or the second category, are what is called as tethered virtual reality devices. And these are, the examples of that are HTC Vive and then the Oculus Rift. The fundamental need for these devices is that you need a powerful PC to be able to experience the environment. But there are advantages and disadvantages as well. What you're looking at, a picture there is Google Cardboard, and that's probably the cheapest and an entry-level device where you can put in any smartphone, download a VR app from the App Store, buy a $15 Google Cardboard or $10, whatever that is. You can find a ton of them on Amazon and eBay, and you can be transported to a different world. Even though the level of that immersion is much lesser than the higher-end devices. The next device in this category is Samsung Gear VR, and that is just been commercially released. It's already sold out. Well, that's what Samsung tells us. But what happens is that you put in the next generation of Samsung devices, and then it gives you a better immersion experience than the Google Cardboard. So the level of immersion progresses as the devices get more and more powerful. So the reason why Oculus Rift and the HTC Vive are tethered is because they're extremely powerful. They're able to have a lot of computing power to render worlds in front of you. The HTC Vive also has positional trackers built in. So they have a technology called Lighthouse, which you place sensors across the corner of the room, and that tracks your body movement. So it knows exactly where you are, and you will be able to move within the experience. So there is a misnomer where people think that virtual reality is all about games. Even though gaming is a big segment where people are building virtual reality applications, it is not true. VR is today transforming a lot of industries. So you have companies which are developing cinematic VR, like Jaunt. They build 360-degree experiences using cinematography technology, but in virtual reality. So some of the demonstrations which you see on the devices which we have there is built by Jaunt. You have architecture companies where you can have a virtual walkthrough of the space which an architect is planning. Without really building it, you get a really nice sense of how the space will look. Then you have sports VR companies, so you can literally be in the front seat of, let us say, a basketball game and experience the game like you are there. And there are companies today which are streaming virtual reality experiences live for sports events, even though none of the HMDs are commercially out. You also have education in virtual reality. So you could transport yourself into a different era and then understand exactly what the people there experienced and therefore learn a lot better. So yeah, so like you can see, there are different industries which are all getting transformed. We talk about even new use cases being developed as a result of this technology. So an idea into the market potential or the opportunity, the HMD sales, HMD, when I say HMD, it is an head-mounted display. It'll grow to around 40 million units in the next 5 years. And the VR market would reach around $7 billion by 2018. These are the predictions, and out of which a large portion of it will be software, and around $2.3 billion would be on the hardware. And they're also predicting that the revenue out of the entire ecosystem would be around $150 billion. But this includes augmented reality and virtual reality. So it's a whole category of digital realities. But what's also interesting is that even though most of the HMDs are not commercially available, there are world-class leading brands developing experiences in VR just because it is transformative. So you have experiences which companies are developing which allow you to experience their product in a really immersive way. We know of car companies building experiences to do car research or car clinics in virtual reality. We know of airline companies building disaster training in virtual reality because it is expensive to crash a plane and train people on what to do. So you build the whole experience in virtual reality and then measure and understand what people do in disasters and what are they supposed to do. It's really transforming every single industry you can think of. But today, virtual reality is not easy. It is a complex process. So in the first bucket you see, you need to be able to capture the content which you want displayed in the head-mounted device. So the capture process again becomes complex because it is 360 degrees. So you have a lot of camera companies getting built now with sophisticated equipment and technology to be able to do 360-degree live action capture. You can also create CGI content. So you have software developers creating virtual worlds based on CGI content, and they use different engines like Unity or Unreal to create these experiences. And once you capture the environment, you need to be able to stitch it together and you have different SDKs or software environments based on Oculus or Vive or whatever your target environment is to be able to stitch all these things together. The third piece of this is for an ability to distribute it, right? There's no point in creating a content unless you distribute it. So there are various mechanisms which are being set up. And if any one of you are familiar with the mobile world, you have the App Store which you go to download a content. Similarly, large companies like Oculus, which is now owned by Facebook, have Oculus Home where you can download content. But there are independent VR distribution companies also getting started. So think of them as YouTube for VR. So very soon you would have places where you can go and download VR content very easily and be able to share them across your friends. So the way we understand social sharing today will get transformed in the few years to be able to share experiences in VR. So let me now tell you what we do at Ease. So the problem we're addressing is that imagine when you have all this digital content being created, developers need to be able to understand user experience like never before. And today the technologies are enabling you to do that. So what we need is a purpose-built platform to understand user behavior and analytics behind that user experience. So that's what our platform does. We help VR developers understand user behavior and craft a really comfortable virtual reality experience for digital realities, right? So we start with VR, but we can go into augmented reality as well. So one of the big problems with VR today is that if your experience is not built correctly, you feel sick. I have seen people feeling nauseous, getting headache if the experience is not built right. So our technology and platform enables VR developers to achieve that level of understanding so that they can build experiences better. So quick summary of the product features. So the product itself will have 3 different buckets of information. So the first one would be core system analytics, where we help the developer understand metrics like what was the session length, how many active sessions, where did the person log in from, all those critical details. If any one of you have used Google Analytics, you'll know that well. But these are all purpose-built for VR. So like, for example, there's something called FPS, which is frame rate per second. This is an important parameter for the developer to understand, because if the frame rate per second dips below a certain point, then the user will start feeling sick. So the second bucket is what we call as engagement analytics. So this is where we help understand what did the person look at, how long they looked at it, what was the user's journey within the experience. So to give you an example, let us say if you have a product sponsor in your virtual reality experience, you can then now go back to your product sponsor and say, here are the number of times people actually looked at your product. Here are the number of times people engaged with your product. So that kind of data has never really been possible because the experiences were not that immersive. Or it could be understanding a person's journey within, let us say, a game. So you want to be able to understand where did the person spend a lot of time, at what level did that person get killed, if it's a shooting game, or how many levels have you gone through to get yourself cured. If you're building a PTSD kind of an experience in virtual reality, you need to be able to then determine what is a cure. So our platform enables virtual reality developers to measure all these different parameters and then develop an engaging experience. The third piece of our platform is what we call as human factors, which is we will be able to determine if the person is comfortable, if they're feeling happy, if they're feeling sad, and everything around human factors. So you might be thinking, how is that possible? So it is possible today with various kinds of algorithms and technology, but this is big data. So you can imagine, so our company is all about data science and artificial intelligence and machine learning. So you will be able to understand user behavior and correlate it to various things like a head motion or a temperature control or a temperature or a heart rate and so on. So one thing which is also happening in the industry is these sensors are getting ubiquitous, right? So you're starting to see sensors in watches and so on, but very soon you'll start seeing sensors in clothing and various other things which you use on a daily life, and that throws up a lot of data. So our platform allows developers to integrate all this data and then come up with intelligence around it. Not sure how many of you can see the screenshot, but this is kind of a screenshot of our product. It displays analytics in a beautiful format. This can be viewed on a desktop or on a mobile device. And again, this is a representation of the user's journey within the experience. So you'll be able to, let's say somebody's walking around this hall, you'll be able to understand where that person has gone, what that person has looked at, how long they looked at it, and so on. So in short, think of us like a DVR for user experience. So you'll be able to record and play back user experience at an individual level or an aggregate level. So you'd have, so think heat maps and so on. We'll also be able to drive in-context performance data. So let's say if somebody is falling sick, and when you fall sick, you tend to take off your HMD. So we'll be able to tell at what point the person took off that HMD. I talked about human factors. So the question you might want to ask is, okay, if I'm a virtual reality developer, how will I use your platform? So today, virtual reality developers develop virtual reality experiences in Unity, which is a game engine. Even if you have developed games, you'll know Unity, or Unreal, which is again a game engine. Unity has the majority market share, and Unreal is picking up steam now. And both these environments allow you to create experiences in virtual reality. So our platform has plugins built in where the developers will be able to easily integrate our patent pending markers into the scenes, and these markers then collect data and throw it back into our platform, which is cloud-based. And we also have plugins into a web-based virtual reality experience if you're building one. That kind of brings me to the end of my presentation. So we also did a first ever study in the industry on human factors, so the effect of virtual reality on human factors. So we did this with a market intelligence firm called Greenlight in virtual reality. And so the study was primarily done to discover and correlate various human factors pre-experience and then post-experience. So that is the survey which you're seeing on your table, or it's there in another table. So like Gamiel mentioned, our platform is all about data collection and measuring human behavior in virtual reality. That brings an end to my talk. Thank you very much. Thank you for your time.
We can open it up to Q&A now if anyone has a question. Great.
Hi, thank you for coming. I work with HoloLens, and I work with PN there, and I was wondering what's your take on AR versus VR, or how will they play out in the next 5 years?
Oh, great question. In my opinion, augmented reality is the superset of all digital realities. So VR is a starting point, but augmented reality is, I think, where everything is headed towards. So within the next 10 years, 5 to 10 years, you will see reality being augmented by various devices, right? But virtual reality is basically it transforms you or it takes you to a different world, and that's why it is VR. But AR, I think, will be a much larger market. So you have companies, HoloLens is a great example, but then you also have Magic Leap, which calls itself as merged reality. So, it is coming. Yeah. So to answer your question, in our opinion, AR is the superset.
Cool. Thank you so much for coming and telling us, excuse me, a little more about ease. Can you tell me a little more about what actions are most impactful and give you the most information in terms of when users and you're analyzing some virtual reality program? For example, you mentioned looking at things, the way they move through virtual reality. What are some of the most telling analytics from that perspective?
Great question. So it really depends on the experience which you are looking at and which you want to analyze. So there are experiences which are getting built where the user doesn't really have to move anywhere, but he does some actions. There is a company we are working with which does cure for phobias. So they have a spider coming in, and it captures your reaction and takes you through different levels. So for that, the user action is just moving from one level to the other, how long you looked at the spider before taking off the HMD. But there are experiences where there is a lot of motion and interactivity. So let's say if you're playing a Star Wars kind of a game in VR, then the actions will be different. You'll have controllers and you'll be moving around and so on. And at that time, what you're measuring is different. You're measuring user actions versus user journey and so on. Then there are experiences which are commercial, like let's say a retail VR experience. So there you are actually looking at what that person is doing. Let's say if he's walking into an apartment, where all did he go? How long did he spend time in the dining area versus the kitchen versus the bedroom versus the office? So it depends on the experience you're building and what you're able to capture. Any other questions?
I actually have a question for Mr. Gran, if that's okay. I know you talked a little bit about all the unicorns and billion-dollar valuations. I was wondering if you considered that to be sort of the next bubble, such as the dot-com bubble in 2000s. If you considered now to be more of a bubble, or just something that's unrealistic and going to be kind of put in check once these companies go public?
Yeah, I don't think it's a bubble. One, because there aren't enough companies that really represent it. Even though the size and scale sounds huge from a funding standpoint and this unicorn thing, the numbers of dots that I showed on my little chart is relatively small, almost by an order of magnitude relative to what we saw in the dot-com era, where literally hundreds, if not thousands of companies were all at risk, or many at risk, with business models that weren't sustainable. In this situation, we've got unsustainable valuations, not necessarily unsustainable revenue. Even Twitter is doing $2 billion, right? So our Snapchat will do, is anybody in the number, 750 this year, I think? So, I mean, there's real revenue in these companies that are very different than what we saw in the pets.com era. Where literally there were companies that were shells for business models. So I don't think it's a reset. I think it's a reset of valuations, which is a good thing. I don't think it changes venture funding fundamentally. I do think that some people in the Valley say, oh, the unicorn thing is going to slow down investment climate, or the equity market is going to slow down investment climate. Yeah, for the firms that don't have money. For the firms that have money, they're on a race to fund everything they can possibly find. So.
Great, thank you. Any other questions?
More questions?
Yeah, I guess, yeah. So are you guys the only company doing this, or how are you, what means success against your competitors in such an early stage in the industry?
Yeah, great question. So because the market is quite early, we are the pioneers, and we are approaching it in a way which is purpose-built for long-term. So it is data-driven and machine learning-based technology. But having said that, because the opportunity is massive, there are companies which are coming up soon. We've heard of 2 other companies which have started to say that they are an analytics platform, and some of them are focused on the gaming industry, and some of them are focused on, let's say, an ad serving industry. So it really, it is evolving yet. So, ad serving is going to become a big opportunity. So some companies are building some analytic tools to serve ads. But there's nobody who is approaching it like the way we are, which is purpose-built, long-term, focused analytics company for virtual reality.
Free demos over here.
All right. Thank you again.